You are listening to chartingwealth.com for Thursday, the 6th of April, 2017. We see that stocks are down for the day. So is gold. Bonds, TLT, the 20-year bond, is up. Let's jump right into SPY, which is the ETF that tracks the S&P 500. What do we see for the day? Down 0.30%. Our buying point was $35.97 after the weekly vertical crossover going down. And of course, we're already $1 better off. Now we track, just to keep everything simple, we are looking at SH, which is the inverse fund for the S&P 500. But what we do to keep everything straight is we just follow the losses as per the S&P. For those of you who don't know what we're talking about using inverse funds when the market starts going down. They move in the opposite direction of the funds that they back up, such as the S&P 500. SPY tracks the S&P 500. SH is one of the short funds that actually moves to the inverse of the S&P 500. So if it's going down and you put your money here, it goes up. And it's gone up about the equivalent of $1 if the price was around $2.35. So we'll continue to track. Things are looking good. Of course, the magic that we found is when we have those weekly vertical crossovers. We jumped in Monday morning after idiot hour at 10:30, and again, the buying point was $235.97. Closed at the end of the day somewhere around $234.77. So $1.20 to the better. So we are very, very happy with that. We are still in that. If we explore a little deeper, what do we see on the 2-hour chart? We see that at the end of the day, there was a huge drop and a bit of a recovery. We, of course, will continue to keep an eye, and particularly those of you who ask, once you get into a trade on the weekly vertical crossover, what is it you really watch? Well, what you watch is once you're able to draw a trend line, your 2-day trend line. Once we are able and actually tracking a good weekly trend line, we will draw that also. And you keep an eye first on your 2-day chart. Now we do, again, we're paying attention. We do see that the derivative oscillator is losing some of its downward momentum. Of course, our big indicator is what is happening with the PPO, the price percent oscillator. That is our big one. Very similar to the MACD for those of you who are familiar with that. And we use the PPO because it actually works better in the long run instead of the MACD, and there are good reasons for that. We have a good teaching. If you'll go to it, you'll understand fully what we are talking about there. But just understand for today's explanation that the PPO is our main indicator. It is still continuing to move down markedly. And of course, the signal line is they're getting nowhere near crossing. We'll continue to watch that. Now, of course, the biggest is our weekly trend and what's really going on with the weekly PPO. Of course, derivative oscillator is flipped over at the same time that we saw the PPO flip over, which is always a good sign when they both move in the negative direction at the same time. Candle we have so far is a bit of a green spinning top, means lots of indecision, which is what we would expect when this market is struggling to figure out what it's going to do. Is it going to keep going up or is it going to go down? Well, with the weekly vertical crossover, we believe that it will continue going down. We'll continue to monitor that. If that doesn't work out, things shoot up and we need to get out of our trade, we will do that. And I want you to understand, we don't always have to be right. What we have to do is do the right things for the right reasons, and that means that in the trend following we use, it usually works. Does it work all the time? Hell no, nothing works all the time. You want to guarantee, go buy an annuity. That's about as close as you're going to get if it doesn't go under. But what we're doing here is we're trying our best to manage our risks, and what we want you to understand is we're not a stock calling service. We're not telling you to go out. Not at all. We're not giving you any advice on how to spend your money or how to invest. What we are trying to do is teach you how to read these charts, encourage you to practice, and when you get good at doing this, to go off on your own and make your own decisions with your own money. Let's go to the Qs now on the 2-day chart. Qs just continues to go up. 2-day chart rotated over going down back on the 14th of March. But remember, we still have a weekly up. What happened? Well, gosh, all the way back in January on, Friday, the 6th of January, we had the weekly vertical crossover going up on the Qs. And the Qs just continues to move up. If we look at the weekly, what do we see going on there? Well, it does look like it's continuing to lose energy. Hasn't crossed over yet. Derivative oscillators losing up energy on the weekly chart, and it looks like it's getting darn close to crossing over. Hasn't happened. So we don't have a trade in the Qs at this time unless you are still in the weekly trade, because we haven't had a crossover going down yet. And of course, if you've stayed in it, you're continuing to do well. Just be cognizant that it does appear, and again, hasn't happened, does appear that it's getting close to crossing over going down. So pay attention to that. Okay, back to the 2-day chart, on to TLT. What's going on with TLT? Well, it's doing what it's supposed to be doing. It's going up. We had a weekly vertical crossover all the way back on the 2nd of February. We had some nice trades and profits right there for the first few days. Then, of course, it dropped off. Then it popped up again. And that topped somewhere around the 28th of February. And then TLT bottomed out again. Remember, we've got a bottom in TLT that's established, and again, this is the 20-year bond fund, somewhere around about 117. And it popped on that again, but then guess what it did? It moved back up, and it crossed back over going up on the 2-day chart back on the 22nd. And that's the 22nd of March. And if we look at the 2-hour chart, we can see that it crossed over going up on noon back on the 3rd. And again, it backed up for quite a while and then peaked and then rolled back over a little bit, trying to go back up. Those of you who are focusing over and over and over on this 2-hour chart, again, remember, keep watching that 2-day chart. Once you got that crossover and you hop in, then watch what happens. If you start seeing the derivative oscillator losing energy, you start seeing the MACD headed, or the PPO rather, headed down toward the signal line, then start getting worried. Also, be sure to check out, not too often, but once a week or so, the weekly chart, of course, which had been losing some energy and then gained it right back again after that crossover going up on the 2-day chart. So again, we're still in there, weekly chart going up, and again, we are continuing to watch the 20-year bond fund. What is the 20-year bond fund going up and gold going up versus the S&P 500 rotating over? And it looks like the Q's getting close to rotating over. That's the NASDAQ 100 going down. Looks to show you, again, it appears from our charts that the stock market has topped out, has sort of, blown its whistle, and now we're watching money flee over, driving up the price of bonds and gold. Now let's go to gold next. What's gold doing? Remember, we had a weekly vertical crossover on gold there on Friday the 27th. That was the 27th of January. Gold went up for quite a while, all the way to hitting its peak on the 28th of February, just like we saw with bonds. Then it lost some energy for several days on the 2-day chart, and then started off again on the 16th of March, moving up. We had a 2-day crossover, 2-day vertical crossover on the 24th of March, and gold lost a little bit of that, a little bit of uncertainty there on the 2-day chart ending on the 30th, and then it started moving up again. And so we are continuing to watch what's going on there. So again, we do have a play into gold right now because we've got the weekly and the 2-day charts moving in the same direction. If we look at that 2-hour chart, Of course, we see that it crossed over going up back on Monday the 3rd and then lost a big hit in the morning on Wednesday and then turned around and recovered as best it could. Gold for the day ended up being down just 0.01%. Now, what's interesting, of course, that we've told all of you gold folks that really follow it with us, we want to see before we feel good about gold going up. We're in the middle of a rollback, but we would very much like to see the crossover on that 4-hour chart going up, because that 4-hour chart, when you start tracking it back, has been so good to us once it leveled out after the beginning of the year, the end of 2016, just like the end of 2017. But gold has really, that 4-hour chart is prescient. It just works again and again and again. So if we see that crossover going up on gold on the 4-hour chart with the weekly and the 2-day already going up, man, get some of that in a virtual trade. Folks, that's where we are at the end of the day. Thank you so much for being with us. Of course, we will be delivering to you after this Thursday report. On Friday, we will be delivering to you, and I'm looking again, if you have your stock market almanac for 2017, pay attention to April and what is listed there. If you don't have the Stock Trader's Almanac, man, you need one. It's my go-to book that I use every day these markets are trading, for all the great information that's packed in those pages between Jeff the son and Yale Hirsch the father. Thank you so much for being with us. You appreciate what we do. We love to hear from you. CW@chartingwealth.com. We love your questions, problems, concerns. Also encourage you, take in all the training. We posted some good stuff last week on the training pages at Charting Wealth. And again, subscribe to our podcast. And how do you do that? Well, you go to chartingwealth.com. You put in your first name, your email address, and we will send you every day the video that we provide to everyone who listens on the top 4 ETFs. And those are the S&P 500, the NASDAQ 100, the 20-year bond fund, and gold. So again, we're covering it with some inversely related ETFs. When something's going up, something else is going down, and vice versa. So thank you so much for being with us, my friends. We appreciate you. Hope you appreciate us. Subscribe to us at YouTube. Of course, on iTunes, give us a 5-star rating. Say something nice about us. You guys have made us as high in the world as like 5th, I checked the other day, for stock trading. So thank you so much for all you do for us. We hope that you find all this helpful. Continue to fill out your daily market worksheets and your weekly market worksheets. You get all that stuff in the show notes when you subscribe at chartingwealth.com. Take care. God bless from chartingwealth.com.